You guys and gals want volatility? You guys want chop and slop in the markets? Well, what you want is what you get. We are all over the map. We'll identify the catalyst. Japan waking things up at 8 p.m. last night. Tons of earnings reports. Incredible move in SMCI. Airbnb getting hit. Shopify up $11. This market is all over the place. We'll talk about it at 8:35 with Jim Tassoni. He's a money manager for MDRN Capital. He'll, he'll put this whole yen trade, carry trade in perspective. It's 8:01. It's Wednesday. It's pre-market prep.
Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Hi, bottom line up 52 handles, 53.18. Important resistance up top. We'll talk about that in a little bit. The buck up 20 cents, 102.96. TLT giving back those gains, second day in a row. That's down 33 cents, 96.26. Crude getting a pop up a buck 66 at 74.86. Gold a little bit on the rebound, up 11.50, trying to put a double bottom in here at 24.43 is where we're trading. Silver still the laggard, hanging out at $27, 27.21. That's flat. Bitcoin, let's call it flat too at 57,200. Let's bring in Triple D and AB and Dennis. We just have to talk about Japan.
It's all about Japan. It was all about Japan last night in the after-hours session, because if you look at last night's after-hours action, you can bring up the chart of the S&P futures here, Joel. We were down 20 handles last night. SMCI had a wild ride. We're going to talk the individual stocks here in a bit, but the entire after-hours session we were down. It was looking like it was going to be an ugly day, and then at 8 o'clock, you know what happens at 8 o'clock? Does anybody know what happens at 8 p.m.? Japan opens. And Japan opened and started running. And then they're like, oh my gosh, we've got to buy stocks. And if you look at the EWJ right now, up 4% here overnight. Huge move. That is why the S&Ps have rallied. That is why the IWM has rallied. That is why the world markets are rallying. We are very dependent on whatever happens in Japan. And there was some news too here from the Bank of Japan here, AB. Do you have that headline for us?
They gave some dovish. Let me pull it up real quick. The exact.
It didn't even look that. I mean, I read the whole article, and they're like, "Oh, we're not going to do anything right now." And then at the end of the article, it says, "Well, we're still going to go a half a point." And I don't know if they were expecting more than a half a point, but I mean, but whatever they said, whatever they did, the street took it as dovish, and here we are. We can't analyze it.
So I think the Bank of Japan's initial plan was to continue raising rates. Then yesterday, or I guess today, they unexpectedly turned cautious on rate hikes amidst market volatility. So obviously, once they had their worst day since 1987 in the Nikkei on Monday, now the Bank of Japan is questioning, I guess, hiking rates, which was their initial plan. So continue to rally in Japan overnight. Going to help us out a little bit. And before we get into earnings, I do want to talk about, yesterday, the price action, we continued moving higher throughout most of the day, and then kind of a wicked sell-off around, 3 p.m. or so, like gave up a lot of the gains from yesterday. Was that just people taking profits and, hey, this rally the past couple days, too much, too fast, we're going to go ahead.
Nervousness, all of the above.
You had the S&P, the SPY, fall more than 1.3% from 2:55 p.m. to the close. Like, that's a major sell-off, and again, erased most of the mornings and most of the day's gains.
So again, and remember what we talked about yesterday, you are now in a trading environment where when you get the gains, you take them or the market takes them from you. We were talking about chop. What are we expecting? Chop. I think you're going to have more chop here again today. Just a big battleground between the bulls and the bears. So if you look, we opened around 521 on the SPY. We dipped down to almost scratch, got down to 517. Then they did the rip roaring rally all day up to almost 530. Then to your point, the last hour, AB, we lost, and if you include the after hours session, we lost about 100 handles. So, I mean, what a wild ride. Now, overnight, the BOJ pumps us back up. But you got that 528, 530 resistance we're coming right back up to here again. So I'd say if you're chasing it here, you're probably doing it backwards. I think you're going to get more opportunities. I don't think you need to panic and say, I got to buy all my stocks. I've missed them. They're going. I mean, and this might bring us to SMCI because you can see what happens, and obviously this market, low bar, high bar. I didn't think SMCI's bar was that high. I didn't think the earnings were that bad. They did a lot of good things here, but they're punishing the stock anyways. This market is pretty wild right now, and it's selling the rips while it's also buying the dips.
Yeah, before we go to that SMCI, which this may be one of the biggest moves I have seen in its stock in an after hours trading, but the S&Ps, and it won't be as illustrated as well in the SPY, but the S&Ps filled the gap from last week's low, right, at 31.75. So if you were short there, you're a little bit early. And then it got in within 4 points of the Globex high from Monday. And I know it was a much lower open and we never came close to the close, but Monday's high, that was a 220 point rally. You're just shaking your head here. And now we're back down. So we are forming, I'll put the S&P back up here. We are forming some major resistance here. We even got back up to this area today. If you're looking for the trapdoor to go back to 5,400 or 5,500, you got 3 highs right now in the same area. Today's high is 53.34. Absolutely paramount over the today or tomorrow, not only to take that level out, but get above it. It's for the rally can continue. Let's go to that SMCI report. Holy
Yeah. Just crazy, incredible moves. AB, give it to us.
Yeah, not often do you see a stock announce a 10-for-1 stock split and still trading down more than 10%. So last night, SMCI for 2024 reported EPS of $6.25, as may not compare to $8.10 estimate. Sales of $5.31 billion was in line. Net sales, let's see, they said 6 to 7 billion versus the $5.3 billion estimate. That's
big raise.
That's a big raise for Q1 2025. So I guess the big miss on EPS, but they raised guidance for Q1 well above the estimates. And then you had JP Morgan come in, lower price target to $9.50. Also, I mentioned it, but they announced that 10-for-1 stock split. So you had that strong guidance. The stock surged initially on the report all the way up to $720, and then just gave it all back and more. Got down to around 530 at its lows. What are we at now? We're at the lows.
We're at the lows.
We're at the lows. Why? What was so wrong with this report?
This is just the market where you could actually be an insider. I've said this, and have the report, and you could still lose money because the moves are wild and they're sometimes very unpredictable, and sometimes they don't make any sense at all. And I'm looking at this, and the move really doesn't make any sense at all. I do have a small piece of SMCI that I put in the long-term portfolio. I was pretty happy when it was popping $100 last night. And now I'm pretty sad that it, dropped $200 from those highs. I guess they think the AI story is over. I guess they're just washing out. I guess, they don't care about stock splits obviously here anymore either. I mean, just looking here, incredible. So what actually happened, I just take you through the action of the report because I was watching this one very closely. They reported the headline numbers, which appeared to be a miss. And then they hit the stock down like $30. But then the 10-for-1 stock split comes out, and the stock split algos are just insane. So they come out and they buy the thing up $140. So I don't know the high, Joel. I think I saw like 7.
Yeah. I'll let you finish up, and there's some really great
720. And then they just started leaking and leaking and leaking and leaking, and the leak would not stop. They could not plug the leak. The boat basically sank, and that was it. And the stock's now settling in right near the low. So we're talking about a 200-point sell-off from those after-hours high. The algos that were buying on that stock split were absolutely murdered. And I mean, right now, if you're running algos on stock split, on earnings beats, on insider buys, if you're running them on insider buys, they are not working, folks. Because right now, we're just in a market that is focused on macro headlines. Upgrades, downgrades, that stuff doesn't matter. When the VIX goes up, write this down. If you can learn anything from this show, write this down. When the VIX goes up, over 30. When the VIX moves up over 30, individual news, obviously earnings reports matter, but little stuff like insider buys, upgrades, downgrades, that stuff takes a backseat. The macros are driving the bus. Most of the time, it's the micros driving the bus. And obviously, you got an earnings report, it's going to drive the bus too. But what big time drives the bus right now is the macros. And so if you're thinking, I'm going to buy this stock or because it's got an insider buy, and then the Japan sells off and the macros sell off, like, why am I down with my stock? Or my stock was upgraded. Why is it down? Stuff doesn't matter nearly as much when the VIX is this high. So you have to adjust your trading styles. You have to adjust those algos. And people who are just buying randomly on stock splits, we're not a month ago. If SMCI reports a 10-for-1 stock split a month ago, it's up $100 and everybody's happy. But we're not in Kansas anymore. We're going to sell the RIP market. And we're in a market that really is, just, take the profits, but just it's got a lot of signs of a bear market, to be honest with you. Now, I know we're ripping here today, but the moves are violent in both directions. So it's a tough market right now.
You got to calm down. And it's so funny because I was watching this and I saw the pop, and then I looked at the dailies and I'm like, I see 4 out of 5 highs at the 720 area. And I was going to go tweet it out, like, check out the resistance there. And then it was like 715, 710, 700, 690. And I'm like, wow, I should be a faster typer. And then it wasn't even a relevant number anymore. So if you're trading this stuff after hours and you get some kind of move like that, I know it's, you could have sold at 680 and be upset when it went to 720, but all the bag holders in the stock from 1,200 down, you built, and then that trapdoor right here, $700. Yep, this is the bottom. 700, 720, 680. Yeah, we're forming a bottom. Boom. These people, they got their money back, and then Dennis, who just handles losses better than anybody in the world, I texted him. I'm like, bag holder central in SMCI, and he goes, "That's me," and I'm like, okay, no more texting Dennis. He's busy.
You've got to separate it. So again, I don't have any SMCI in my trading account. I'm not looking at it. I know I have a small piece. I put a half size position in there at 690. Like a week ago, like really recently. So it sucks to be down at 527, and it sucks to be down. I think there's some value here, though. I actually think there's some value. I'm probably going to buy some more here today. I may be wrong. Maybe AI is a bubble. Maybe SMCI is, a scam, like people are saying it's a fraud and all that. But we did pretty good on it the first time around. But you can't, you got to know if it's a trade or an investment. I'm going to say I have no swing trades on. Not even a one, not even like a little one, nothing.
Oh, it's so hard.
So you can hold a long time. I've got my RSP where I do my long-term investing, and that's about 40% cash right now. I need to keep moving that back in. That needs to get all back in. So this is an opportunity on a lot of stocks. I bought a little bit more Tesla yesterday. Maybe Tesla goes down to $100. You know what? In your long-term investing, you have to be comfortable. You can't be like, oh, I got this in my long-term and I'm down 10%. And what am I going to do? If you're doing that, 1, maybe stock investing isn't for you, or 2, maybe you're just too big and you can't handle it. You've got to be able to handle the long-term investing. Trading is a completely different animal. I don't accept losers in the trading. I get out. So I cut them quickly. So it's just completely different. So 2 hats always. One investing hat, 1 trading hat. Investing, buy good companies at reasonable valuations. Trading, you got to trade the momentum. How am I trading this market? I'm fading everything. Buying when the market is down. I was loading up last night again when the market is trading in, and then I'm selling this morning when the market is trading out. I've had this week is my best trading week so far this year. Right now, we're 2 days in. It's already, I think, past. So you say, how, with all this volatility is awesome. So the trading is amazing. The investing account sucks, Joel. Sucks. I was telling you, my long-term investment account, I looked yesterday, is down 7% in 1 week. That sucks. The long-term investing account.
That's volatile.
It's long-term.
It's nice,
but it was also
goes
up. It was also up like 40 or 30% or something this year. So it's given back. You got to give it perspective. So I had some Nvidia and stuff that really helped it. So it really moved up. And I'm levered up, and Tesla destroyed it. I have a huge position in Tesla. That's come off, so that's hit me too. But you can't worry about that stuff. You got to buy good companies, reasonable valuations, have a longer time frame. What you can worry about is your trading. Don't like sit in here and say, okay, well, it'll come back. I'm going to buy here. And if it goes down, I'll just buy more. And then I'll let the trade become an investment. No, there's separate accounts. Trading account, investing account. You can't let the trades become investments because you can't be bag holding in your trading account. You need that capital to trade.
Yeah, I just wanted to go real quick on this SMCI. Believe it or not, I mean, I want to tighten up or make a little longer time frame here, 30-minute, but we're going to look at the daily here. And you have the low for the move is lower now, 529.50, but we caught a wicked bounce on that. We've already trading below it. It looks like you just still have step down sellers here. Pre-market low, 521.17. I would keep an eye on that. But I'd have to say the only area where there's a pair of lows is around 505. So if you want to, or excuse me, 502, nice round number, 500. If you're waiting for more, I'd say you're being a little bit greedy on the downside. 502, split your lows from January 30th and January 31st. On the upside, I don't know. The 8 o'clock prints are not going to give me a relevant number here.
Oh, gosh, the 8 o'clock prints going for it. Did Robinhood reopen up last night? Their 8 p.m. trading? They had to close the night before. I don't know if they did reopen it up, if somebody can verify that. IB never closed their 8 o'clock trading. I trade on IB. It was actually pretty good last night, the IB trading. I kind of, it was some pretty good action because we had such big moves at 8 p.m. So then there was some opportunity there. But just if Robinhood, some people are saying no, some people are saying yes, some stocks. So just wondering, if I can get verification if Robinhood actually did. Only select ETFs, they're saying. So maybe not everything.
Yeah, I mean, that was weird.
Not individual tickers, just ETFs.
Got it.
Okay.
All right, well, let's keep the earnings train ticking. We also had Rivian come out yesterday after the close, ticker RIVN. And Rivian reported at first, so I guess I'll give the numbers first, then we'll talk about the price action. So Rivian reported EPS of a loss of $1.27 that beat the estimates by 14 cents, revenue of $1.12 billion that missed by 30 million. Let's see, it reaffirmed all aspects of guidance for the year. So it didn't lower guidance, didn't raise guidance, but reaffirmed the guidance, and again missed that revenue number by 30 million there. So Rivian stock, I mean, it got kind of crushed after the report, initial pop, but then traded down, let's see, more than $1.30, down 9% this morning.
Wow. This is a tough stock because I do think EVs and I do think the trucks are awesome. But again, it's just maybe not the environment for this. You're in this tough environment, and it's tough for Tesla too. I mean, that's why Tesla shares are going down. I mean, it's a tough environment to be a car company. Look at your traditional automakers even. These things are trading with P's at 4 and 5. Ford's under $10.
I know.
Ford? Look at the Ford chart. It went from 14 to 9. I mean, you think your Tesla got beat up, and then you look at Ford, and you're like, holy crap. I mean, maybe it's close on a percentage basis, but I don't think it is actually. Tesla down 20%. What's Ford down? Ford's down like 35% the same time.
40%.
And Ford and GM actually reported pretty good numbers.
Look at that GM chart. I mean, holy Mick.
Hammer it. I mean, I don't know. Like the value, a lot of me wants to buy some General Motors down here. But then I think I'm all Tesla, rah, bull. And I'm like, well, I'm full self-drive, and the General Motors struggling with their unit there. But, I know we're going away from Rivian here. But I just trying to get a landscape. Like first you paint, when you're investing in a stock, paint the macro picture first. We have uncertainty in the macro picture. We don't know if we're going to recession. The first thing they cut out in a recession is buying a new car. So, I mean, maybe that's the reason that Ford and GM are absolutely getting crushed right now. So then you think, well, Rivian sells cars, and they sell really expensive ones. If you think you're going into a recession, you absolutely don't want to own Rivian. Now, I don't know if we're going to a recession or not. I think interest rates are going to go lower. I've been nibbling in. I kind of like the Rivian as a number 2 player. I kind of like the company. I don't think it's a zero. Obviously, a lot of these, EVs are zeros. I don't think Rivian is. But it's a tough environment. So maybe you just wait for the dust to settle and get more clarity on where we're going, because there's a lot of tough, news out there.
Do you remember this in Rivian? Do you remember this day right here, this little run up that you had, or maybe it was this day you had to pull back in the run up? You remember what the news was?
Was that Volkswagen $1.5 billion?
Yep, yep, yep. That's was the news, and then boom, faded just like everything else with the market. Tough call here. Let's see here. The pre-market low, I'm looking at this, is 1331. And I think I said this a while ago. If you want to wait to, Rivian, maybe let it see what happens between 12 and 13. It's not below 13 yet. 13 was low yesterday, 1296. Got a nice little gap in here between 1204. So I think maybe it has some work to do in 12 and 13. Maybe not come all the way down and fill the gap. But if you feel like you missed this one, you were bummed when it went to almost 19 bucks. I think you're getting an opportunity in a 12 handle. Maybe not today, but I'd look at that 12, 13, fill that little gap, build a base, and turn back up if you are looking to invest in Rivian, RIVN. But man, this GM move, I remember that day that it happened. They just came
It
in
was
off the open.
54. It was up
It's saying 54.
10%.
You're right. You're
And
right.
then it was, so it doesn't show up on your charts. It was 54 in the pre-market. It was trading up 10%. And then it opened like red. And I'm like, oh my gosh, they're going to open this red. They bag held every earnings algo. All those earnings algos that are like, oh, we just buy when we beat earnings. Yeah. You just program this and you make money. Yeah, that works well in a bull market. But when you start getting a bear market, it's just a way to burn cash buying stocks up 10% on earnings beats because they come back down. So, wow.
Dennis, I just went to the after hours chart, the 240 minute.
Nice.
Yeah, the high was 53.10.
53.10.
Yeah.
Which was, and it closed like that day, I think around 49. So I remember it was close up 8% anyways. It was up big. And we're like, that's a big beat. These are good earnings. And they were rah, CNBC, look how great GM is. And then it just started leaking. And you don't want to start seeing the leak, like SMCI last night. You don't want to see the leak. Plug the hole. Funny story from the fishing trip. We'll go on one quick tangent. We're in this like, it's called like Elephant Head Lake or something. It's a fly-in lake, and I was telling you that. But we had a 4-wheeler trail that we were able to trail some boats to. Anyway, we had like some beater boats. I mean, like your small little beater tin boats. Anyways, we're out there fishing, catching some bass. 3 of us in the boat. It's going pretty good. And then I'm like, oh, there's a little bit of water here. I'm like, we've been pulling and fish like crazy, so maybe the water's dripping off the fish. I'm like, no, there's quite a bit of water here. And then we look, one of the rivets in the bottom of the boat blew out, and it's just coming in like just like this. Is flying in. I was like, yeah, the rivet blew right out. So then we're like, okay. I'm like, and then my buddy Joao was with us, and he's like, well, I'm like, because I'm in the front of the boat and he can see it. I'm like, well, I'm catching pretty good bass here. You got a few minutes? He's like, we got about 5 minutes until we're sunk, so we better get to shore. So we just booted to shore, and he's like, find me a stick. So we found a stick up there, and we just plugged the stick, jammed it right down in the hole of the rivet, and then we continued fishing with a stick in the hole of the boat. That's how we plugged the leak. So SMCI needed a stick last night to plug their leak. They didn't have it.
Number one, did you have a life jacket on?
No. No, of course not. I can swim though, but I should. We kids
and number
wear life jackets.
A stick.
No,
I would not have gotten back on that boat. I'm not even sure we had life
jackets in the boat.
I would have got back on that boat. I would have been
up in the middle of nowhere. I'm almost guaranteed we didn't even have life jackets in the boat.
Risk reward there, Dennis.
Maybe we did. We had them in the boat.
I don't see a risk reward getting in a boat that has a hole in it. But anyways, this is a bad tangent.
The reward was, how many bass we caught? We were sitting there, and you get in these fly-in lakes, and there's nobody there. For the fishermen out there, it was smallmouth bass. There's so many. You cast onto shore, and just by the cast, I'm getting one. And then you're pulling it in. You've got a bass on, and there's 7 more chasing it. It's like the completely lake is like stocked or something. I don't even know how it's possible there's that many bass. But it's crazy. Like I went bass fishing, like Rice Lake, Peterborough people, it's pretty good out there. There's a lot of different places. I grew up bass fishing with my dad. I've never seen bass fishing like this, where we pulled in, the 3 of us. There was one period we got into a school of bass. We probably pulled in 50 bass in an hour. 50. And they're all like 2-pounders. So you keep your limit. You can get 6, so you can keep your limit. And then you're just tossing. Then we're trying to catch biggest fish. So there was so many bass at one time. I was just jigging, and I'm like, I can see the bass all swarming it, and I'm like, no, you're too small. I'm trying to jig to the bigger one. No, go get your grandpa. Bring him over here. Crazy bass fishing. That's why you stay in that Rin-a-tin tin boat with the stick in it, because the bass fishing was awesome.
Do you like
Risk
bass?
reward was awesome.
Do you like bass?
It's awesome. Yeah.
Okay.
And those guys on Rob,
come on,
those guys clean the thing so well you don't even get a bone. I know it's a bad tangent, but
come on now.
AB, you don't fish?
I
never
love
fished?
fishing.
I
love
hate
fishing.
I hate
You love this fishing.
Smallmouth bass is probably the most fun type of fish to catch because they give you a little bit of fight with them, and it's hard to find good spots to catch smallmouth.
The tangent was we needed SMCI to plug the leaks. So the lesson here is when the stocks are up and they start leaking, you have to be very concerned, because if they leak enough to go red, they usually go hard red. Why is that? Because you caught all the bag holder earnings breakout traders that are on the wrong side of it. So why is SMCI down so much? Right now, it's caught all those traders who bought that thing on the stock split, and this market punishes the max amount of participants. So they got to puke that stock out. All the algos that bought the thing, they got to puke it out, and they're all hoping it bounces back. But they were hoping at 5, it was going to bounce back at 620, at 610, at 600, at 590, 580. It's down here at 530, and they're crushed. Their P&Ls are just destroyed, those earnings, those algos that were buying that thing on the stock split. So it's a matter of they got to shake out and wash out. So, I mean, you got to get those hands out of there. That's how you base, and eventually maybe you move higher. But I don't think it just bounces back today because everybody got caught in that last night.
Double bottom on the 15-minute. If you're looking for a level to lean on, 522 was your low in the last bracket, 521.17. But you also have to think about it, Dennis. What about, you can talk about all the bag holders up here, but what about the people that came into the report short or had puts, and they're just like, when it's over 700, they're like, this has to be the stupidest trade I ever did in my entire life. I know the expected move was not $200 on that, right? It was
it was high.
It couldn't have been two. If it was
okay, let's go look. We're just, we're lessons here. I know we got lots of stocks to cover. Let's quickly go look at the expected move because we can still see because the options haven't reopened.
But
go to options.
It went up to 730 and then down from there. So the move.
Yeah. So did it get? A good point. Did it get within the $100? What was the expected move? So SMCI's expected move was 80, around 80. I'm just ballparking from the options close, about $80. So you go 80 up, 80 down. Amazing CC Legator. Look, we're down up. We went up 100, down 86. He'd have that chart going like that. That's why we love CC. That kept it in line. I mean, really, the expected move kind of kept it there.
All right, let's. Upstart probably got outside of its expected move, up 25% this morning on the report. And I'm kind of beating myself up over this because Upstart is one that I kind of liked as it start getting beat up because we talked about people need money right now. They're probably seeing increased demand for loans. Ooh. So the numbers here for Upstart, EPS of negative 17 cents, a loss of 17 cents, beat the estimates by 22 cents, revenue of 128 million, basically in line, beat by about 3.5 million. But then they gave some strong Q3 guidance here. So they said for Q3, let's see, for the third quarter, they said 150 million was the revenue guidance. The expectation was 125. So again, Upstart is kind of a AI-driven platform that you can apply for a loan in like 10 seconds. You get approved in 10 seconds. The money's in your account the next day. Don't ask me how I know that, but it is a interesting technology they got running for that stock.
Wow. Man, oh man, I'll just give the technical thing here. And I did not look at this stock before the report, but you had no business once this took out 24.50 being short. It probably went through there like in a nanosecond.
Yeah, look at the move. Look at the opening bar. The algos go 25, 26, 27, 29. This one worked. So this is the one they made on. They got rocked on SMCI, but they made on this one.
Yeah, there was no blink there. This is the 5 minutes. So boom, up over the 24.50, and then that was the low of the next bar as well. Probably that one you had to go, oh, this looks good, and maybe if you threw in a 25 bid, maybe it would have gotten something, but it probably moved in like nanoseconds. But move for Upstart, pre-market high. I mean, if we're 33, it poked up there a couple times. So use that as a target if you're looking for more. On the monthlies, man, this thing has been beat up so much. There's nothing. There's a 30.17 high from May. So 30, nice round number. That's about it.
All right, another stock.
Affirm moving off of it too. So if you're wondering
Yeah,
why
I had
Affirm's
that.
up 7%, that's the pure play here. They moved together. I pair trade those things together. So that's why Affirm's up this morning. Shopify.
Yeah.
Shopify.
Woo.
Wow. This is a great company. And the valuation was starting to become more reasonable. I actually put it on my shopping list, pun kind of intended. I didn't buy it though. I looked at the earnings. I'm like, I'm not buying it before earnings. I just didn't have the guts, but it was, and I'm regretting that now. I obviously wish I would have. Wow, what a move! Give us those numbers here, AB.
Yeah, so for Q2, the EPS came in at 13 cents, beat the 12-cent estimate. Sales came in at $2 billion, missed the $2.01 billion estimate. So missed slightly there on the sales here, but then I think they gave some strong guidance, or let's see.
Yeah, C's Q3 2024 revenue to grow at low to mid 20s percentage on a year-over-year basis. That's big growth.
That's
big growth, especially when your stock has went from 70 to 50 in 12 trading days or 15 trading days. So the low bar was there, and then you talk about 20% growth on a year-over-year basis. The market is going to love that. And the market's taking that number literally and trying to rally the stock 20% off of that growth. So nice move up here for Shopify. Again, I'm not chasing anything in this market up 18%. You know, maybe it continues. There's resistance up at 70 if it really gets silly. That's your major resistance point. I don't think it's going to get that far, but it's up $9, and this market is absolutely insane, so anything can happen. But I think you got to wait for dips now. But congratulations to all the buyers. I thought about it when it got under 50, went to 48 the other day. I wrote it down, and then I saw it reporting. I'm like, you know what? I'm just going to wait for the report and get the information report. And obviously it was a mistake. Should have just bought it.
The only Canadian tech company, right? Shopify.
It's the big one. It's not the only one, but it's the big one. Yeah.
That in BlackBerry.
BlackBerry.
60. I like the $64 area. The only reason I'm emphasizing it is you had 3 highs in that area back just at the end of July. So if you're buying this off the hop and you're looking for 70, 75, 80, make sure you get a sustained 64 bid in here. This would be another one too. If they do jam it off the open, let's say, they take it up to, 64.80 or $65, then it comes back down through that area, then look out, because the top of yesterday's range is way down at 54.89. I don't think we're going to fill that gap today in Shopify.
All right, let's continue.
One more, and then let's go to our guest.
Yeah, let's go to Airbnb.
Sure.
Yikes from Airbnb. So, this is another indication that maybe there is pockets of the U.S. economy that has been slowing down. They talked about slowing demand here at Airbnb. Sorry, I'm just waiting for these numbers to load for me real quick.
Well, that's people getting tight for cash and not wanting to do as much as they were willing to do before. Maybe we're not going to go get this fancy Airbnb weekend up in the Muskokas or wherever you are, and Muskokas around here, or northern Michigan, or I think that's playing in here. The luxury, discretionary, big purchases, probably not the place to be right now. What were the
I got the numbers up. So we had EPS of 86 cents, missed by 5 cents, revenue of 2.75 billion, beat by 10 billion. Expects Q3 revenue of 3.67 to 3.73 billion, representing year-over-year growth of 8 to 10%. So that's not terrible, but I think in the call they talked about a little bit lower demand. So you had worse than expected Q2 EPS. Issued Q3 revenue guidance below estimates there. So anytime you're missing EPS and giving soft revenue guidance, not the right combination, not the right recipe for for your stock to go higher. So you're seeing
definitely not
Stock go down about 14% this morning, $112. Joel, do we got some
No
levels
man's
down here?
land. I mean, I hate to try and call a bottom here, but we are $4 off the pre-market low, 108.27. So if they want to start sending it south and you're looking to pick it up, that's the only relevant number you have is that pre-market low. And like I said, it does look like you have a little bit of bid off that. Well, it is down 14%. On the monthlies, if you don't even like 108, then maybe wait for your May 23 low at 103.55. But not a good report for Airbnb. And I don't know. Just look at these other. I mean, look what their airlines have done. Obviously, no one's flying. I did see RCL yesterday had a big pop. I don't know if that was earnings related or not, but that had a big haircut, 175 to 130. But 8:36. Let's go to our guest.
All right, we got Jim Tassoni hanging out backstage. Let's go ahead and bring Jim on pre-market prep.
All right, Jim Tassoni in the house. He serves as a senior consultant to MDRN Capital, as well as the CIO of Armor Wealth Strategies, a veteran in money management. At one point, individually managed $300 million, and for a larger firm, he had $2 billion in client assets. Jim, how you doing today?
Good, Joel. How are you, my friend?
Good. And he also likes to dabble in the futures markets, has some trading systems for futures. And how are you enjoying the volatility?
You know, it's funny, and I think you and I were chatting offline, and if anybody wants some stories on Joel, I've known this guy close to 20 years now, in and out of the markets. So I'm happy to hear him at any point.
We love the Joel stories.
I won't take us on a tangent. I know we've already had a fishing story that I enjoyed, at least, but won't take us on any more tangents. But as far as the volatility goes, I know I was talking to you, Joel. I tend to be a little bit more of a longer term or swing trader, but over the last 4 or 5 weeks, I've found myself really engaging more in the day trading realm, just because the volatility has provided so many more opportunities.
Okay, so what a day to talk about. You put a really nice presentation here. And let me get it up here. And the whole world is abuzz with a recession. And then we can also get into the yen carry trade here. Just pulled up your first screen so our audience can see that. Sure. Is this deja vu all over again?
Yeah, and that's the funny part. And you know, you go on Twitter or X, whatever you want to call it, or you go to these various chat rooms or things like that. And it's funny how we all move from experts on different things. 3-4 years ago, we all became MDs and knew everything about vaccines and medicine. And now everybody's a currency trader and knows everything about the yen carry and everything like that. So what I tried to do is I tried to find some information first on interest rates, because those are in the news all the time. And then we'll talk a little bit about the yen carry trade. And the first thing, and I actually got this, I'll give credit where credit's due, from Campbell Harvey, who's the Duke professor who came up with the yield curve inversion recession indicator, which has been fairly accurate as far as economic indicators go over the years. And I thought this one was really interesting, and I will caveat it with, I in no way, shape, or form think that we're in an 08 type scenario, that we're about to have a meltdown like that. There were many different factors going on at that time, a much different situation in the overall financial markets. But it is interesting to see that the last time the yield curve was inverted for 19 months, like it was until it briefly went uninverted a day or two ago, was back in 2007. And at that point, the Fed was actually, investors and money managers were calling for the Fed to lower rates, kind of how we just had here in July. There was a lot of clamoring that we should have moved then. They held pat. They ended up lowering later, just as we anticipate happening now. And you can see that they ended up taking it from there all the way into to zero. And we obviously had a pretty significant recession. I'm not calling for that. I'm not saying history is going to repeat itself, but when you're out there trading or investing, it's always good to kind of know your surroundings and the situation you might find yourself in based on past performance.
Okay, I love the colors in this one here. The market abuzz with Japan, and you're got Japan U.S. dollar correlation with the triple Qs here. What's this trying to tell us, Jim?
So essentially what I did here is I found this chart and I thought it was really interesting. It looked at the Japan US dollar correlation with the Qs. And what's extremely interesting is you can see you don't have to even look at the colors or all the different things. I know it can get a little bit wonky, but you can basically see that there's a significant correlation over the last couple of months with the yen carry unwind and the Qs. And we see a significant dip as the yen carry unwound. And so between you and I, one of the charts that I have up on my screen all the time, especially in my day in swing trading now, is that 6J futures chart. And you can actually look at that Japanese yen futures chart, and it really does correlate. When that thing starts to turn around, as it has the last day or two, the market's turned around and we've headed higher. So I think it can be a nice indicator to have to either confirm a trade that you might be looking at going either way, or to at least indicate that it may be time to be aware of a pivot or a move counter to where you currently are.
Yeah, and that changes time to time, right? Different things, the bonds. I remember being back in the S&Ps, we used to call the opening of the S&Ps off the 30-year bond. Oh, the bond's up 4 ticks. We're opening up a handle. Those days are gone. Dennis, did you want to make any comments on this chart?
I think you're maybe going to go into it. I was going to say with the carry trade, I think you're actually going to have that. So I'll let you finish your slide, and then I'm going to have some questions on the carry trade.
Yeah, absolutely. So, it's, again, we talk about, it's great to kind of talk about what happened, but I think for all of us traders, myself included, it's much more important to kind of have an idea of, or at least a thought of where we may go from here or how we might want to position ourselves. And so I found another great chart that kind of looked at over the past 25 years, when we've had significant blowouts in these spreads, in terms of the Japanese yen US dollar spread, which has been a trade that has been put on for years. It gets attention at different various points. And you can see we had similar types of moves in this spread back in 02, in that kind of 08, 09 period, again in 11, and then right around the COVID time. And in each one of these cases, and it may be a little difficult to see here because it's a log chart for the S&P, but the total downswing in the S&P 500 was around 15%. So you can say we're maybe 6, 7, 8%. Now we've bounced back some off of the all-time highs when we whooshed down there. But in my opinion, I would still tread very cautiously here. Now, if you're trading swing or day, I'm not saying don't take any longs. But what I am saying is, based on this information, we need to be careful and cognizant that there could be a little bit more pain, and it may be wise to wait for some really opportune opportunities, for lack of a better word, in various stocks and positioning, because I think between you and I, there may be some more downside ahead of us.
Okay, a few specific setups here, and then we'll go to Dennis with some questions here. Looking at the SPY here, I'm not sure what is this what you're looking? Are you coming down for a retest, or were something that was already it? Because we didn't quite get to 510.
Yeah, so I'm looking for a retest of that low. I will start out by saying, of the three, I guess, major U.S. indices, the Qs, SPY, IWM, I'm probably the most neutral on SPY right now. This is a trade that if we saw that retest, and I'm a big retest and confirm guy. I'm not I've found much more success in just blindly buying the dips, especially when it's for a trade. I'd like to see us hold 510, maybe on a daily, get down there, touch it, and hold it. And then I'd be maybe looking for a move up into the end of the year. So this is kind of a longer term trade. I'd stop myself out because I always want to have a good risk reward on if we had a daily close below 495. But that's kind of, again, very neutral right now on the S&P, but that's kind of the best trade I can see from I guess I would call it a longer term swing perspective.
Okay. Same setup in the NASDAQ, looking for the retest of the low. I'm going to IWM, basically the same setup here. But you're looking at both ways here. You're looking to take a short analog in this one.
So actually, I'm looking at a short in the IWM. So this is the thing about the IWM, and it may be a little contrarian actually to what people are thinking with interest rates coming down, that we could see a bounce. I know I've heard Dennis talk about this too. I hate the IWM. I think it's one of the most poorly constructed indexes I have ever seen in my life. And I liken it to, I'm a portfolio manager. In my past, I've managed billions of dollars for institutional clients. And I laugh thinking about if I tried to roll out a strategy and I told my advisors and clients, hey, I'm going to put together a fund. And the idea is 60 to 70% of the companies in there are going to be unprofitable. How much can I count you in for in this investment? And so I really do not like the structure. I'm not saying there aren't opportunities in small cap, but if we see a bounce in the small cap index, I would be trying to load up for a short, again, thinking that we may have some more downside to go before we eventually find a bottom here. And this may be a accelerated way to play it.
Okay, and then ANF here, you're looking for actually to take out the low,
Yep.
right? And not quite by a 140 target there. ANF trying to catch a bounce. Moderna, this one here, you don't like this company, huh? You're looking for a short in this
love you
one?
that you don't like Moderna.
Yeah, this is another one where I just think, from a fundamental standpoint, I think their day in the sun has passed.
Yeah.
I think, the COVID vaccines are becoming something that, people are less likely to take. Forget your political leanings or anything like that. It's just the variants are becoming less serious. People are feeling more comfortable just going without. And then some of the other drugs they have in the pipeline for RSV or influenza, they're interesting, but they're competing with Glaxo. They're competing with Pfizer. These companies have war chests to decimate Moderna. I don't like the fundamentals, and I think so. If we got a pop in the stock, I'd be looking to load a short there.
Okay, Dennis, we got a couple minutes here. I'll let you
let's take it
questions.
back to the carry trade here, because we know this is maybe one of the main reasons we had the sell-off, obviously, on Monday as this trade unwinds. You got any feeling on how big this is? Because it's kind of a scary thought to think that there's so much money in the world that's just going to Japan and borrowing cheap so that they can lever up to invest in, the Qs and NVIDIA and the AI trade and everything else. That's kind of a scary thought, like you think, people are putting their hard-earned dollars into this, but sometimes people are putting the hard-earned dollars of other people into this too. So, how big do you think this trade is, and have we seen the worst of it yet?
And that's a great question, and it's sort of actually a little bit difficult to quantify. And you're spot on. I've been trying to figure this out. You can look at the CFTC data on the futures, and that gives you some idea. But obviously, we know then we have the currency market, which is so deep and so difficult to quantify. I've seen numbers ranging all the way up that you could have you have billions to hundreds of billions of dollars that are tied up in this trade in some way, shape, or form. And I think the scary part, not to be a doomsdayer, but the scary part is how it bleeds into all kinds of other things, because it's not just the USD and the Japanese yen and the Qs. I mean, people are leveraging this, and I think, Dennis, you may have talked about this a day or two ago. People are leveraging this to do a myriad of different trades, because essentially they were looking at it, anything that they could invest in that generated a higher yield, even if it was treasuries. So they could borrow against the yen at, 0.25% and go out and buy treasuries. And as that blows out, we have a sale in treasuries, and does that spark more risk on? So like I said, I think realistically, and you got to watch the market for cues, but realistically, another 8 to 10% down from here would not surprise me at all. But that being said, I don't foresee a all out, 30-40% correction coming.
Okay, excellent presentation. Jim Tassoni, Senior Consultant at MDRN Capital, CIO of Armor Wealth Strategies, joining us here on Pre-Market Prep. Jim, we'll get you back again real soon. That was a very informative presentation, and getting a lot of compliments here from you for you in the chat. So thanks, Jim. We'll talk to you soon.
Thanks,
Jim.
guys. Take care.
Thank you, Jim.
I love it when our guests come with slides and are so prepared like that. I think that's the first time we've had Jim on, and I've known Jim for a while too, but that was an awesome presentation. Like when you're coming at it from the money management side and you've got the slides and you're showing different things. I mean, that's what I love, is when guests come prepared like that. Obviously Cameron, we know we've had on the show, and she's always very prepared too. I love it when the guests show up with slides like that.
Yeah, a lot of thought that went into that, and it's just not, look at the chart. Hey, here's a double bottom or triple
exactly.
top.
Like that's just it. Anybody could come on, talk a chart and talk technicals, but then you start talking. This is the real reason, folks, why markets move. A lot of the technicals, can tell you, and try to predict short-term movements, but the long-term movements are predicted by money managers and the institutional managers and the big bucks. And this carry trade, we don't know just how big this thing is. So it's important. It's very important to be paying attention. And you think about, like, if everybody's sitting here and borrowing cheap, on yen, and then the yen explodes, then they're stuck, and then they get margin calls, and then they got to start selling stocks. I mean, sometimes this is the best opportunities for you as a long-term investor to buy those good companies at reasonable valuation. So what I would say is, have your shopping list ready. Have the companies that maybe you missed in the first half of this year, saying, well, I want to get these companies this time, because this carry trade could come off a little bit more and maybe give you another shot. And I think I'm with Jim. I don't think we're crashing 40-50% here. I don't think this is the start of another great recession. I think, interest rates are going to start going down here, and this stuff is going to tend to fix itself as interest rates in our country start to go down. I do think that AI is real. So I do think you're getting a fabulous opportunity on some of these names to buy them at reasonable valuations now.
Let's go through a couple more earnings reports. Did we have Disney's numbers come out, I believe?
Yeah,
Yes,
we did. House of Mouse. Yep.
So Disney reported this morning. Let's see, EPS came in at $1.39. That beat the $1.20 estimate. Sales came in at $23.2 billion. Missed the 23. Or wait, that's weird. I'm getting some weird numbers in here. Either way,
it's a beat and a beat. Where they're getting from the conference call, even the stock has now went right off the conference call. I'm going to read you this from the Benzinga Pro. Disney CFO predicts flat attendance at the parks for the next few quarters. CEO Iger says the company is developing stronger streaming recommendations and investing in content across all directions for value creation. Disney is just not firing on all cylinders. There's companies like NVIDIA. Obviously their valuations are stretched, but they're just firing on all cylinders. And there's companies like Disney that are firing on no cylinders right now. The company is an absolute mess. We know the Disney Plus product, what they've done with Star Wars. The Acolyte had a couple episodes, which were pretty good, but a lot of the Star Wars stuff is getting watered down now and just not that exciting. They're talking about raising the price on the Disney Plus. I go on there, there's nothing to watch. If I didn't have my two kids watching it, I would unsubscribe, but they kind of like some, my daughter likes the cartoons and stuff that are on there. And it's like safe. Like sometimes you go into some of these other and you're like, if she's on YouTube watching, you don't know what you're going to watch. So, when you're watching Disney and you're watching some of this stuff's pretty safe for her to watch. But besides that, parks is like 45% of their revenue. So when you say that half of your business is going to be flat, that's not what the market wants to hear whatsoever. And then you go and look at valuation on Disney, which it's not super cheap yet. I know the stocks come way off, but if you get the Disney valuation, it's trading 16 times forward earnings. Well, that's not bad, but I mean, the market multiple is 17, 18, and then you can go and start getting AI companies at a cheaper valuation. I think why? Why do I want to put my money here if there's not an imminent turnaround? They've made a mess at Disney Plus. The parks are flat. What's the story to drive this thing higher? It was on a 90 support. It's giving way for that here now too. I'm very concerned, about Disney.
Yeah, I was going to say, I mean, if there is a, real economic slowdown, people cutting back on spending money, spending thousands of dollars to go to the
It's
parks.
too much.
I mean, and you can do a different type of vacation with your family where you're not, paying, I don't know how much like the tickets are to go in every day, but like you could probably cut that family vacation price in half if you go somewhere else that's not, a Disney park or whatever.
It's unbelievable, AB. When I was there back in December, I'm looking in the ticket prices, and the kids, they only knock like $10 off. My daughter's 6 at the time, and she's $139, I think, for one park for one day. And I'm just like, so you go in there, me, my 2 kids, we're like $500 just
before
for the park
you
ticket.
eat, before
and then
you
eat, and you're in there parking. You're $700 to $800 US to go into one of their parks for one day. It's gone crazy.
It's like a ski
too
trip.
much money. It's almost like the McDonald's problem. Where's the value menu, Disney? At least McDonald's is trying to fix it. I actually ate a $5.79 value combo. Whereas at PreMarket Prep that gave McDonald's that idea because we were talking about come out, and then a month later they came out with a $5 value menu, and now it's $5.79 in Canada because of the currency difference there. But that felt good to go into McDonald's and actually eat a combo. And it doesn't fill you right up, small fry, the small little McDouble, and the small pop. But at least, they're listening. They're listening to their customers because the prices were just going insane. So I'm going to say Disney needs to have their McDonald's moment now where they have some type of like deal or discount or something to get those attendance numbers up. Your attendance is flat. You know why it's flat? Because nobody can bloody afford to go there. They got to figure it out.
Nice pop up on the dailies. If you were keeping an eye on this 95 level, you had to be cat quick. You had a high at 95.16 and a high at 94.84. What confluence get there? Pre-market high 94.99. Probably someone sitting there with a boatload at the point. That doesn't do you any good now, right? Because we're traded down 205. The low of the move. 86, yesterday's low, 87.96. So if the bulls are going to come in and defend this stock, it will be off the hop and you get a sustained 88 bid. If not, the low of the move and the low on Monday is 86.42. But big move in the house of mouse.
All right. Any other big ones from this morning that we got to hit? Looks like should we
Lyft.
do Lyft real quick? Lyft. There was no misprint on the revenue this time. That made the stock go up 50%. But Lyft reported EPS of 1 cent, which actually beat the estimates by 4 cents. Revenue of 1.44 billion, beat by 50 million there. And while those numbers were good, they gave some disappointing outlook here. So not great for Lyft there. Stock trading down about 13% this morning.
Got a buyer in the low 9s.
If
here.
Tesla figures out FSD, it's a big if, and they're a ways away from it. If they figure it out, I think Uber will compete. I think Lyft will not survive. I believe if Tesla, and I'm not saying this is the time to short Lyft because it's way down already, and we've been talking about this. Maybe you need a bounce and you need a rally in it to short it. But I do think if Tesla figures out FSD, I think Lyft may actually be a zero. So that's why I wouldn't invest in this one, even though if you think it's profitable now and it's turning around. If you think Tesla's not solving FSD, then Uber is probably the buy. But I think Tesla is going to solve FSD. That's obviously why I've been buying it. I think it changes everything. But they're a ways away from it. They're probably a year to 2 years away from fully solving FSD. But I think the writing is kind of on the wall here for Lyft. There's problems either way, and they just can't figure it out. Lyft is in trouble.
All-time low 785. That would be a ways down, but this $10 area, or excuse me, we're under 10. I mean, I'm just gonna go on the 15-minute chart here, the 30-minute chart. Looks like someone's throwing some bids out here in the lower nines. They're not chasing. They're not paying 950, 960, 970, 980. They're just kind of sitting there and they're bringing in stock. I look at all these 15-minute lows, and since 7 o'clock, you've had one, two, three. The last high was the last low was a little bit higher. But see what happens in the low nines. You look like you got a whale down there. We'll see if it gets back to that level today.
And maybe there's bounces, like I said, if I'm putting short positions on them, I'm always waiting for the rips to sell into, not shortening the whole 13%. But I'm just saying, coming in, buying the dip, thinking this is a good company, a reasonable valuation. I think there's problems here.
All right, guys. Well, that brings us to 9 a.m. Joel, who do we have coming on with us tomorrow?
We have the Jemiah CEO plan to come on tomorrow. And that had a rough day yesterday. So
Francis Dufay.
Yeah, and we're gonna bring in Zunaid. We're gonna bring in a pinch hitter to do that one. So
nice.
that's the plan. And then Friday, set your alarms. Friday, Craig Johnson's coming on. And I know he was early with this call, but man, oh man, I mean, really,
is there anybody that calls market better than Craig Johnson? Let's just call it out here. Craig is solid. I mean, he makes bad calls too. We all do, but I feel like his overall pictures of the market, the guy's really in tune. Craig just does a fabulous job.
He sticks to it. He sticks to his gut.
And he can be wrong for a while, but the guy seems like he ends up being right, at the end of it. Like he seems like he ends up being right. If you're listening to Craig Johnson, you're probably doing pretty good.
Okay. All right. So great show today, guys.
Shout out Jim Tassoni. That was a good first time guest there for Jim. So we got to get him on again soon. Joel, kudos to you. That was a good booking. Sometimes you make some good decisions, Joel. I don't know.
I'm just going to give you my closing thoughts. I think more chop is in store. Obviously, dips are going to get bought. There's people who think they missed the bottom. So as you get the dips bought, I'm probably buying dips too. I'm also selling rips as well. I think you're just kind of the fade trade is still here. Earnings tonight. There's a few here that are going to be interesting. Robinhood probably highlights the night. I mean, Robinhood stock has really been beat up too. Can they, bounce back here? I think a lot of things were going well. Obviously, it's a crypto play as well when you're buying Robinhood, but that's one that I'm watching tonight. And then Eli Lilly's on Thursday morning, I believe. So that's going to be interesting as well.
All right. Well, There you go. Again, guys, thanks for everyone who has tuned in. We do have live trading starting up after this. We'll see you guys tomorrow morning, 8 a.m.